bottom line bank be a major player in the global economic system? We're going to find out with Kat Taylor, the founder of One Pacific Coast Bank, right here on Rainmakers. Welcome to the show.
Thank you very much.
So a triple bottom line bank, what is that?
We are a bank that's dedicated to 3 bottom lines versus 1. So we still need to be financially sustainable and profitable, especially as a regulated federal bank. But we equally serve the goals of achieving social justice and environmental well-being. And because of our ownership structure, we can maintain an equal commitment to all 3 bottom lines.
Now you're a co-founder of this bank, right?
Yes.
And where are you located?
Our headquarters is in Oakland, California, but we serve the Salmon Nation, the bioregion that covers the 3 West Coast states. So we have offices throughout.
And you're the founder, co-founder?
One of the co-founders.
One of the co-founders. Why a triple bottom line bank? I mean, why not just go and make a lot of money like other banks?
So our objective for going into banking in the first place was to support social justice and environmental well-being through a finance vehicle. We studied over our lifetime the great pioneering banks like Shore Bank in Chicago, Grameen Bank in Bangladesh, Self-Help Credit Union in North Carolina, which were really responses to a financial system that was increasingly disinvesting from and leaving poor communities behind, and achieving a profit at the disparagement of the environmental commons upon which we all depend.
You are a CDFI?
We are a CDFI.
And what is that?
It's an official designation of the Treasury Department. It's a certification that you have to earn through an application process where you show your dedication to serving underserved communities. And it's a rigorous process, but once you achieve that certification, you're eligible for some grant monies through the Treasury.
Now, we're going to talk a lot about the bank, and especially some things from the website. One of the things is that you state that you reinvest proceeds into communities, your communities. Could you define communities for me? Because it seems to be a changing thing.
Sure. So we want to be a bank that's responsive to the local communities that we serve, where we take deposits, and we focus on low-income communities because they've been traditionally underserved by the big banks. When we started, we were in California, so those local communities were in California, but shortly into our history, we merged with a great peer bank in the Pacific Northwest. So now those communities dot all of Northern California, Oregon, and Washington. And really, when we say our communities, we mean distressed communities. But we also mean the environment, because we're trying to serve that through our lending practices. The other reference in that statement is to our ownership model. So all of the economic rights of the bank are held by a foundation of the same name, One Pacific Coast Foundation. It's the only economic rights holder of the bank. So if and when profits are distributed through dividends, like any other bank, they can only go to the foundation, and the foundation is mandated by its bylaws to reinvest those in low-income communities that we serve or the environment, and it's permanently restricted to holding that stock. If it ever sells it, it has to get approval, and if it sells it, it has to be to another nonprofit organization.
Wow. Well, forgive me, I have to ask you, the first part of that bottom line, the triple bottom line, are you financially successful?
We are earning our way to profitability and expect to be there in the 3rd quarter of this year. It's been a tough banking climate, but mostly we're just getting the model right, and we absorbed a merger in a really early part of our evolution.
Let's talk about Kat Taylor just a little bit. When I think of low-income communities, I don't think of someone who has a Harvard degree and a double major in a JD and MBA from Stanford. I mean, that's really heavy stuff.
Thank you.
And you've been successful everywhere that you have gone. Why focus on low-income banking?
Well, the real reason is that I meant to go into civil rights, which was what captivated me as a young person. But by the time I was getting out of college, which was in 1980, civil rights leaders and the movement had recognized that really civil rights without economic access and opportunity would be a hollow victory. Both were very important. My family had been in banking. I had spent a little bit of time in a bank, and some of my colleagues suggested that my combination of background might be one that was good for pushing forward the frontier of beneficial banking.
Something else that you've done is that you have done well in life, and from a financial standpoint, and as a result of that, though, you have taken what we here in the Pacific Northwest call the Gates Pledge. Tell us about that.
Yes. So Bill Gates and Warren Buffett, who are both friends and colleagues of my husband's, have organized an effort to recruit wealthy families into the Giving Pledge, which is a commitment by the family to give at least half of their wealth to charitable purposes in their lifetime. My husband and I had already made a commitment when we first met that we would meet our family's needs, and after that dedicate our lives and our resources to the causes that we thought were important. So it's very much squared with what they were trying to get done, and we really appreciate their leadership in recruiting others to join the pledge and are happy to be part of it.
This is no small pledge, though. You essentially are pledging to give away a tremendous amount of your wealth instead of keeping it inside your family or building a giant business up.
Mm-hmm. It is, but it's what we would like to do naturally. We want to be good citizens. We want to use our abilities in any way we can, and if that includes financial resources, that's fine. Even when it doesn't someday, we'll still be hard at this work. We also have a very understanding family. They're young people who want to make their own way and make their own contribution to the world, and so in a sense, it's giving them a blank, an open canvas.
Let's go back to the bank, and by the way, we're going to be putting the bank's website up often. This is not a normal bank in terms of what people think, and specifically, going from the website, committed to transparency, we intend to produce this performance report annually and supplement it, and then we're going to go on to something else. But I got to talk about transparency. It's not something that I think of when I think of banks.
No, and sadly, it's not been the practice of all banks, especially over the last several decades. We're committed to a beneficial view of banking. That's why we use the phrase beneficial banking. Banks are very important to the financial system. They are the amplification of the money system in many respects, and they are usually the point of contact for people, for most people, be that their transactional accounts or savings accounts are there, or they're getting a mortgage through a bank, or it's physically present in their community, or it's an anchor tenant in community economic development. Banks are really important. So when they're not pursuing a beneficial model, but rather an extractive model, it takes its toll. It's really a hard thing to turn around. So we were born on the eve of the financial crisis. We think a lot of the financial crisis came from a lack of transparency and just a very bad value proposition in banking. So we'd like to turn that around. We're a tiny bank compared to the major money setter banks and the financial system as a whole, not to mention the international money system. But we think we can set an example. And the example is a constructive model of lending, taking deposits from communities, lending it back to constructive activities that create jobs, income, and wealth, and lead to the resiliency of the whole community as well as the individuals and homeowners. But if we're going to set that model of transparency, we need to be transparent about ourselves first and foremost. So we work very hard to make our pricing and fee structures transparent, so you know what you're getting. We work hard for them not to be extractive or somehow worsen a person's financial condition. We try to be as transparent as we can about where our loan dollars go and also where they don't, and then our company practices as well, how we're reducing our carbon footprint, landfill water, our labor practices, our commitment to community procurement, all sorts of things. And we think if we do that and join others who do that, it will set an example, hopefully, of creating opportunities for banks through transparency.
When you talk to other bankers or other bank presidents or bank CEOs who may be from banks that many people know of, are they looking at you and they're saying, you'll never make it, or they're saying, why don't you just come and let us buy you out? Or?
Yeah, fair question. I think they rarely say it, but they must be thinking it. This is pushing a rock up a hill to some extent, but it's the best game in town, and we intend to pursue it. And recently, I've noticed that we partner with some of the big banks especially in their impact investing areas, and we have tremendous colleagues within them. I'm actually going to speak at a banking conference on Monday, one of the big banks, and my colleague there asked me to be provocative. Not something they usually have to ask me to do, but what he meant was, give a call to action. What is it you want the big banks to do? What is in their opportunity set that they may not have thought of before?
Okay, well, this won't be seen before Monday, so
no.
So what are you going to tell them? What's going to be the provocative part that you're going to tell other bankers?
Well, I'm going to use a couple of examples. You may know of the extremely pernicious practice of payday lending. It's really a scourge in our communities. It's the practice of lending someone money against a future paycheck and requiring that they pay it back in 2 weeks when it isn't humanly possible for anybody to pay back a loan in 2 weeks. If they needed the money, they didn't have it, and therefore, so what happens is people revolve these 2-week loans. On average, they're out 5 months. They roll over 12 times, and every time they roll over, there's a large application fee, something on the order of $45 for a $300 loan. So the stated interest on the loan may be reasonably sounding like 15%. But by the time you calculate 12 rollover fees into an APR, you're upwards of 500%. These are also debt traps because you might end up paying back over $1,000 of interest on a $300 loan. So you've essentially just put someone further into debt, and they may have had a hard time paying back the initial $300 to begin with.
That's here in the United States. That's not a loan shark in a what we call an impact country.
No. It's prevalent. I believe the latest statistic that I heard was that there are more payday and high-fee check cashing outlets in the state of California than all the fast food outlets combined. Subject to fact verification, I'm sure your audience will be on that, but if we're even closer, right, that's a problem.
Boy, it is a problem. But now, how does that impact banking, or is it a bank, one of the large banks that owns those companies?
Well, it has benefited big banks because some of them have provided the capital to fund off-balance sheet businesses, and so by virtue of getting high returns through them, they're supporting the industry. I think a lot of them have really rethought that, and some of the new rulemaking around Dodd-Frank may curtail some of that practice.
So what is your bank doing about that?
So well, first, we're not offering any products in our bank menu that resemble that. You will find some products in commercial banks and regular banks that look a little bit like a payday loan. They're usually called something like payroll advance or something like that. So we're making sure that the products that we provide directly as a bank are what's called FDIC small dollar compliant. So the FDIC has parameters that they think are healthy terms for a small dollar loan. More importantly, we're working with innovators in this space. They're really more in the business of credit rehabilitation. So taking a deeply subprime consumer borrower who may already be in a payday loan and refinancing it, of necessity still at a very high interest rate because these are very subprime, but instantly migrating them towards better credit behavior, better terms, better credit ratings. The example that I intend to talk about on Monday with the big banks is that if you are in the business of credit rehabilitation, you are in the business of creating future bank customers. If you are a payday lender, you are destroying them. And the most expensive thing for big banks to do is customer acquisition. So for goodness sakes, let's have a business that creates bank customers for you, not one that destroys them.
I'm definitely hearing Grameen Bank in there, as a matter of fact, so I can see where that came from. And even though microfinance rates in impact countries are very high, it's not nearly as high as the other kinds of money that people in impact countries got before.
Yeah.
Some of the other things from your website are really interesting, especially with regard to what you're talking about is supporting and rewarding impact analysis by our borrowers. What does that mean? And what does it mean in the practical sense?
So if you think about what a bank does, we facilitate activities. We loan capital so that somebody else can get something done, a business, a nonprofit, an agency. It's hard for us to know what our impact is in lending those loan dollars if we don't know what the impact of the borrower is. So we're working very hard to create incentives and make the business case for our borrowers to analyze what their impact is. 75 to 80% of our loan dollars are out with actors who are trying to transform the way we get our food, our energy, the way we evenly provide housing opportunities, activities such as that. They're inherently interested in their impact, but they may not have the means or the incentives to truly gauge it. We are members of the, we're a B Corporation assessed company. I bet you a lot of your viewers know about B Corps. They're wonderful companies who have made a pledge.
You know, and if you don't know about B corporations, we'll put a link up on the screen so that you can go and find out a little bit more.
Perfect. So to be B Corp assessed, you go through a 200 point assessment, many questions that really get at what it is you're accomplishing and how you do that, what your company practices are. It's a fascinating process to go through because you learn a lot about your company and areas for improvement. But you also can make a better narrative about what you're getting done, both in real quantitative metrics and also just the story you tell. So we are very eagerly encouraging borrowers to look at the B Corp community. There are a lot of benefits associated with being a member, and the process is very richly rewarding. We're also trying to figure out metric regimes that would be easier for our borrower to adapt to and then report back to us. And then we can really tell a compelling story about what our loan capital is accomplishing.
A couple of things from the report that's on that it was really interesting to me. What's an efficiency ratio?
Oh,
and this is really not boring stuff. I mean, it's really not. This is really pretty exciting.
Yes,
tell us about an efficiency ratio.
So we engage in what's called peer bank analysis. And in order to do that, what we're doing is comparing ourselves to other banks that we want to be like when we grow up, peer banks in the mission space, so that we have some benchmarks. We know directionally how we're going. We've chosen about 12 indicators to look at, many of them standard bank indicators, one of which is an efficiency ratio. That's a ratio that's trying to get at by looking at the number of personnel you have versus earning assets, or there are other calculations of it, but trying to get at, are you delivering your service that may be high quality and maybe be high impact in the most efficient way possible.
There's another ratio on the website that I'd never heard of before, the Texas ratio. What is that?
So I'm never sure if the Texas ratio got its name from the S&L crisis, which was so heavily centered on Texas and the southern states. But it's really the main indicator of credit quality, and it has been a real predictor of bank failure. You want it to be under 1, and if it gets to 1 or climbing from there, it's something to really pay attention to. But it's really a measure of credit quality and credit trends. That's very important to a lending organization.
Getting back to something that's really kind of different, and it's not ratios, but you do talk about on your website about putting your money where your heart is. I want to talk about the bank's money and you putting it where the bank's heart is, but I want to go to yours. I noticed that you're on the board of the Inside Prison Project.
Yes,
How did you get interested in that, which seems really far removed from banking?
Yes. I have a number of other board memberships that might seem far away too, but the real story is that we have been trying to make grants to social service agencies for a long time, and I've sat on a lot of boards. A friend of ours who was on the board of Inside Prison Project asked us to make a very significant commitment, and we feel like if we're going to do that, we need to really get to know the organization. So I asked if I could visit their work, which happens inside San Quentin. So these are restorative justice programs in San Quentin that really allow the men to take responsibility for the crime that they've committed and to do the very important inner healing work and accountability that allows them truly to move on with their lives. When I went to visit the program, I was so overwhelmed by the beauty of the men engaged in this process and how much it impacted me. I joined the board, and I've been on it for the last 10 years, I think. So.
Do you have a metric or an analysis for them too?
We do. We use recidivism, and so does the state of California. California has a recidivism or re-victimization is the percentage of offenders who end up back incarcerated within 18 months of a crime. So in other words, they have not truly been rehabilitated and returned to a non-crime committing state. It's very high in California. I think it's in the low 70s. That's high for the United States. It's high for the world, I think. So it's a very serious problem of wasted human capital and economic resources and just plain injustice.
Speaking of the world, for our regular viewers, they know that Rainmakers is focused globally.
Yes.
And something that really struck me with regard to your bank is that you talked about as well, and you say you are part of meaningful social justice and environmental benefits while being financially sustainable. And if there was anything that speaks to the global community, it's that right there. Is that something that you, Kat Taylor, intend to do with your bank, even though you may just be focused on local communities in Washington, Oregon, and California right now?
Absolutely. In fact, we participate in a wonderful light secretariat worldwide called the Global Alliance for Banking on Values. It was started by some of the pioneering social justice and environmental banks, Triodos Bank in the Netherlands, GLS in Germany, Mi Banco in Peru, Broct Bank in Bangladesh. Forgive me, whoever I'm leaving off. And they invited a number of us, much tinier institutions committed to the same triple bottom line, to join. And we convene and try to create common practice, distribute or broadcast information about the model. They're busily working on a bank scorecard that would help create an asset class and attract investment capital to the space. And these are quite large banks that have managed to remain locally responsive and very impactful even as they attain scale.
So do you think that you are essentially more of a global banker than you are an American banker?
I think we're going to be a West Coast bank permanently, pretty sure, but we will remain connected with global partners and global trends. I'll give you one example. We are very committed to always connecting environmental well-being with social justice. In our minds, they go hand in hand. So does the deeply important connection between rural and urban communities. If you think about, a lot of environmental degradation has come from the way we manage natural resources that belong to all of us, really. It can create diasporas of poverty, an enormous amount of environmental damage. So we need to work on them both. And I would say that's a case statement for around the world, in China, India, everywhere. We need to make sure that we attain both those goals.
There's also, on your website, you talk about targeted lending sectors, which also you refer to them as transformative sectors. Those are people who you may be willing to lend to that others are not. Is that right?
Yes, we still are a very heavily regulated bank, and we have strict underwriting criteria, but we work extremely hard to bring partners or credit enhancement or just more knowledge and education to especially those transformative actors, to try to get them the loan capital we think they deserve, because they're really the ones pioneering how we're going to meet human needs in future without despoiling the planet or increasing income disparity, those sorts of measures. We also created 2 equity affiliates, BrightPath Capital, which provides growth capital, and the Emerging Impact Fund, which provides seed stage capital, because sometimes a company is at a point in their evolution where they need finance that just is not able to be provided by a bank.
So you're for individuals, for companies, for nonprofits, for basically a general bank.
Yes, we are. I would say 95% of our lending is commercial lending, meaning to businesses, nonprofits, or agencies. We're not really a retail bank by design, the exception being our payday loan alternative product, because it's so important to our theory of change in commercial lending. And we also have a growing program in what we call real affinity cards. Those are the cards that you often see given by a membership organization or even an airline. And our version is aligned with our values, so that the members of those organizations who keep our card know that the banking activities are too.
I'm hearing an alignment between business, your bank, and society, which is what we've talked about. And it's April the 17th, 2013, as we record this show. And several weeks ago, you hosted President Obama at your home. And I suspect that other people who were there at the home, in fact, it was in the news, it was reported that there were a lot of people who were what we would call philanthro-capitalists. Among those people, the guests who were there interacting with President Obama, Are they like you in the sense that they believe that business does have a role in social change?
Absolutely. And actually, all of them, I think, believe that business can be a very positive force in social change because it has such extraordinary power of organization, discipline, coordination, but it has to be a very conscious model that's focused on beneficial social change. Some of them actively run large business organizations that are what we'd call a social venture and are using business profits as well as business activities to affect social change. And all of them in the room are we're deeply committed to particularly climate and energy issues, and see the absolute necessity of lining up business resources to produce an advanced energy economy, and to knocking down some of the subsidy that are propping up legacy systems.
If I turn on the news, which I do, I'm going to hear negative things, and the world's coming to an end soon. Mm-hmm. But then I hear people like you, and it sounds like there's optimism. Mm-hmm. I mean, is there really, do people believe that there can be significant change across the world, not just in my local community?
Well, this may be tautological, but I'd say the future belongs to the optimists. We're the people talking about it. So, yes, I think there's a huge amount of optimism in our organization. A fair dose of realism, too. Banking is a clunky business, so we get a dose of it every day, and we've just been through a really hard economic time for banking. But people are pretty jazzed up about the ability of beneficial business models as well as beneficial banking, creating the future we want to see.
Yeah, in the last minute and a half or so that we have in the show, that's what I wanted to ask about, the beneficial business models, the B corporations. Do you see more U.S. businesses, more global businesses, looking at the triple bottom line?
I hope so, and I think so. I'll tell you, we live in a much more perfect information age, so I would say false branding or hollow brands are not going to survive much longer. And so I think to win consumer businesses, I think companies are going to have to get very real about the total effect of their activities. I think that if we can create more of the case for beneficial business, winning more business, that's the way you create a customer base and a constituency and loyalty. That to me seems very promising. And I also have enormous hope in the flood of young people coming to our door, extremely talented in ways that I could never hope to be, who just absolutely believe that's the way that they're going to build their future.
Wow. Sounds fantastic. We're going to be looking forward to watching more what happens with the One Pacific Coast Bank. Kat Taylor, thank you very much for being with us.
Thank you very much for this opportunity.
Again, be sure to go to the website often, because you're going to have a lot of questions, and maybe, just maybe, this triple bottom line bank is the global bank of the future. Take care.
Opportunity.